Roger began trading on 1st of January 2014, preparing accounts to 30th April each year. His first accounts were for the 16 months to 30th April 2015. In 2017, he decided to change his accounting date to 30th June. The first accounts made up to the new date were for the 14 months to 30th June 2017, and the conditions necessary for the change of basis period were all satisfied. We did discuss in the tutorial this week about the conditions which needs to be satisfied regarding the change of the basis period. Roger ceased trading on 31st of May 2020, so the business finished. His adjusted trading profits were as follows. From 1st of January 2014 to 30th April 2015, 33,920, and these are for 16 months time period. Then year to 30th April 2016, 29,700. And then the third year was 1st of May 2016 to 30th June 2017, 33,300 pounds, and this is for 14 months time period. Then we have a normal year of 12 months, 41,600. 2019 was a normal period as well, 37,900. And then we had last year, which started on 1st of July 2019 till 1st of May 2020. So that makes it 11 months, 23,500. Compute Roger's trading income for all tax years. The main problem in this question is the assessment of basis period. And if you understand what the basis periods are, then the trading profits wouldn't be a big problem. So let's go to my Excel sheet now, and I'm going to share my Excel sheet with you guys now. So as you can see on the screen now, you have my Excel, and what I've done today to save time, I've done a bit of work beforehand. So you can see that we have 10.9. So this is example 10.9. And to start with, our first data is that he started business from 1st of January 2014. So 1st of January 2014 till we have 30th April 2015. These are 16 months as discussed. And so if we highlight the timeline, because it does have some time, 1st of January till 30th April 2015, I'm going to highlight this. So that's yellow, that's 16 months. And the profit was 33,920. So that's the data we have. Now, first of all, we need to divide this period into basis periods. Year 1 is 2013-14. Remember, the first year always ends to 5th of April 2014. Yeah. So 1st of January, February, March, 31st of March, and 5th of April would be considered the same from the timeline point of view, from the rules point of view. So we will do this. So first 3 months, we have falling in the tax year 2013 and 14. So if it's 5th April 2014, that's the end of 13-14. So 2013-14 we have, and these are 3 months. I'll write 3 months over there. I will, so months 1, 2, and 3, it ends there. So I'm going to give it a color, and what I'll do, I'll write down 3 months, and the profit for this period would be 3 times 16, because it's 3 months out of 16 months, and the profit for 16 months was 33. Let's start with the profit first. 33,920 times 3 divided by 16. So the profit was 636,660 for this time period. So he will be taxed on this profit in year 2013 and 14. Then next year is 2014 and 15. So this is the second year now, and the rule for the second year is that it would always be 12 months, whether the end date is the actual end date or not. So we need to see that what are the 12 months we can get, because the period is 16 months ending in 30th April. So what we need to do, we need to make the last date of 2014 and 15 as our end date, and we go back to, so the rule is basically that if the actual year is ending within the year, then we start from that date. But if it's not ending, then we start from the actual tax year end date, which is the 5th of April. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And 12. So that's basically 6th of April. So let's give it another color, and we get our this period. Now this is 12 months. The rule says it must be 12 months. Then the profit, how much profit should be there, that's what we need to calculate. So for this time period, the total profit for 16 months is 33,920 times 12 divided by 16. So our profit would be this much. Now the third year needs to end at the actual date if the second year has not ended. That is the rule. So 2015-16 would end, first of all, it would end somewhere in 2015 and 16. So 30th April 2015 falls in 15-16. So that's another condition which has been met. So 12 months. So this would actually 1st of May last year till 30th of April this year. This makes it as 12 months now. So again, we have 12 months. And the profit for this period again will be very similar to the above figure, because again it's 12 months. So we are doing pro rata. So we have our 3 years sorted. So 1 year becomes 3 basis year. Then we have 30th April 2016, which is quite normal year. It's 12 months. So it's ending in year 16-17, so 2016-17. The actual profit, no issues in this year because it's 12 months, it's the 4th year, no cessation happening, no change of date happening. So everything fine. So what I'll do, I'll actually go to this now, and I'll make another from 1st of May 2015 to 2016, because it's ending in year 2016. So these are my 12 months. I'll give it another color now. Yeah, 12 months, no issues there at all. Okay. calculate the overlap profits. Freeze. So as you can see that this is the time period when there is an overlap. So we should have an 11-month period with an overlap profits of 33,920 times 11 divided by 16. So this is 11 month, which is overlap profit. So we will need this when, so these overlap profits could be, we can claim an overlap relief when we change a date or when the business changes. Yeah. So that figure will be required. Now we can go back to our year, which we are doing now, when the date actually changes. So 2017 and 18. The actual figure is 33330. So let me hide these again now. Otherwise, we'll be just going too much on the right. So from this date, what he decides that he will do it for 14 months now till 30th June. So that's my date, as you can see on the top. And this is, so the situation is that this is 14 months. And the second thing is that the profit, actual profit is 33,300. Now, basis period can only be more than 12 months when you change the date. So he has changed the date, and in this case, the basis period is 3,300. Now, this is the time when we can actually claim back our relief. So what we will do is we will take away, we will apply for the relief. Now, because the excess is 2 months, not 12 months, is 14 months. So we can claim the relief which is equivalent to 2 months of the overlap profits. So what we will do, we will take away a figure of that overlap relief, all right? So the overlap, which we calculated above, was 23320. The profits we paid twice in those 11 months, so that is for 11 months. However, because the change of the date extends only for 2 months, we can only claim for 2 months out of 11. So the figure we have is 3,300 minus 23320 times 2 divided by 11, and we get 29060. Yeah. So that's our 17-18 now. 18-19, no problem. The things go back to normal. 2018-19, the problem. So we'll take the same figure as 41,600. 600. And I will not do the timeline. It's not really important for this year. And then we have 2019 and 20. Again, full year's profit, 37,900. 7,900. As given in the book. Now we come to the last year, which is the year, which is this current year, 2020 and 21. Now what he does is that he seizes trade. So if you read that the Roger ceases trading on 31st of May 2020, his adjusted trading profit were as follows. It doesn't really matter how many months he actually traded in the last year. What we need to do is basically his actual profit, which are 23,500. We'll start with this. 1 minute. So we will start with actual profits 23,500, and this is the time to claim back all of the relief, overlap relief, which you are supposed to get. So the balance figure is the actual overlap profits were 23320. We have already claimed some money, which is 4240. So the difference would be 23,500 minus. Okay. Not coming up the right way. I don't understand what is happening here, but let's just do this another way. 23,500, and then we take away whatever we have taken before. So 23,320 minus 4240. So that's 19080. So what do we have here? We have 23,500 minus 19080, and we have our final profits of 4420.